Good evening, everyone. Welcome to Closing Comments here on April 14th. Let's dive into these charts and see how we opened up the week. Got our June 25 live cattle on the board to start us off. Today we saw pretty decent upside across the cattle market. We did see price open up just above $1.97 today and chopping around our bull pivot for the first 2 hours before getting some traction late in the day and pushing us higher. Picking up a little over $2 today. We did see price get close to that prior week high. If we look down on our lower time frame, we can see last week's equal distribution here and two tests of this $1.9940 level. That's going to be a key level going forward this week. We would like to see the bulls get some traction above that early tomorrow. They might need to take a little pullback here to pick up some more buyers before finally being able to break out of that level. But if we get above 99.40, expect the momentum to really kick in and the bulls to set their targets on this gap dating back to April 3rd to the 4th. This gap is going to be target number one, and if we're able to chew through that, we should see new all-time highs come from beyond that. So pretty good upside here today. Nice picture, good looking picture for the bulls here at the moment. We did see pretty light volume here on these live cattle, but upside is upside, so can't argue with price. The big picture uptrend remains intact, and it looks like the bulls are going to be putting up a fight here and trying to drive this thing higher this week. So be ready for momentum above 99.40 to take us into those $2, that 203 range, 204 range at this gap. Pretty good looking picture at the moment. Always beware of volatility. We aren't necessarily out of the woods yet, but we are seeing some signs of this market recovering. As we go down the line, we do see upside across all the way back into December. Not as much strength back here, but upside all across the board here. It's a solid win for the live cattle today. Next up, we got our May feeders. Today we saw a gap above our bull pivot with price opening up at 280.12. This was a pretty good run. Not a lot of range today, a little over just a little shy of $2. We did see price pull back and test our bull pivot, which was our prior week high, and found support before closing up. We should see the bulls, as they got above this 20-day average, we should see those bulls push through and keep marching higher. We are seeing they are hitting that resistance at the same gap from April 3rd to the 4th. If the bulls are able to chew through that, we should see new all-time highs coming as the bulls will start looking for $3 again. Good upside on the feeders all down the board. This cattle market remains strong and did a great job of shaking off this big breakdown. So look for continued strength in the cattle market going forward. Today we did see some downside in the corn market with price bouncing off 490 and pulling back a little bit. Price staying inside our prior day's range, so Friday's range. Not a whole lot of excitement here. This market did see 1, 2, 3, 4, 5, 6, 7 days up in a row before finally stalling out here. With the bulls pushing up like that, a little dip isn't anything to be worried about. Would be expecting the bulls to be active on pullbacks here and look to support this market if we get back down and push towards these averages. Dips will be buying opportunities in this corn market, as we have had that trend reversal, and we should see upside continue from here. This May contract is just about to be passed up by July in volume, so be ready to roll into this July contract going forward. Starting tomorrow, that's going to be the one we're going to be watching. So keep that in mind. Pretty good uptrend look here in this corn market, so expect that to continue. Near term, we could see a continued pullback, but be ready to buy those dips. Next up, we got our crude oil market. Pretty quiet day in crude. Lots of just chopping back and forth today. Price not really going anywhere as it bounced back and forth across our bull pivot. This market has seen some extended conditions, oversold conditions, so I do anticipate this price pulling back towards this 20-day average and trying to find some resistance up here in the mid-60s. In the meantime, expect this market to keep chopping. Anything below 59.50 is going to open the doors to more selling. But I would prefer to be a seller up here at 65, but we'll just have to wait and see what price offers us in the week ahead. In the meantime, don't get caught up in the chop. Be ready for continued volatility and choppy action here. and that's why I think being a seller up here at 65 is going to be a little better risk reward ratio going forward on the shorts as this downtrend remains intact, and I expect the bears to keep on driving this thing lower in the long term. Equity markets had a pretty quiet day considering the volatility we've seen over the last month or two. Only a 106-point range day on the S&P, which is a crazy thing to say, only 100 points, but in the grand scheme of things here, we've seen pretty wide ranges recently, so quiet pause day here just below the 20-day average is not a good look for the bulls. The bears are going to be watching this thing going forward. Didn't have a very great close, and I'd expect to see below 54.15 here and continued selling below this prior day low at 53.91 will really kick in the selling, and we could see more downside. Be prepared for more volatility. No big news tomorrow scheduled, so wouldn't be surprised to see another test of that 20-day average, but if we start to break down below 54, expect the selling to kick back in, and we could start heading back down towards those low fives. Nasdaq, same picture, lost a little bit more ground. The Dow, same thing, chopping sideways, but all these markets seeing some resistance here at the 20-day average and these prior lows. Expect the selling to kick back in, and we could see more downside to come here. That's all we got for tonight. Thanks for tuning in. Have a good evening.